Hi guys, here's Doc's Market Minute for Thursday, March 10th. I'm looking at the SPX right now, and the market's been open for maybe about an hour and a half, the cash market so far. And what we've seen so far at this point appears to be kind of a shooting star on the daily candlestick. Now, what does this mean? Well, today, Mario Draghi of the ECB basically threatened to unload the kitchen sink in terms of stimulus onto the market, and this is very telling. First of all, I think that the market had rallied up to this, so the news was, for the most part, already priced in that the ECB was going to apply stimulus. But we might also be seeing a gradual shift on these central bank policies. Before, we would see the central banks support the market, and then we'd see a huge rally from there, and it would stick on for a number of days, right, before it would finally fade back and at least print a higher low at some point. But now we're seeing, as soon as the news comes out, we're seeing the market fade that move right into there. So this is very telling, seeing this type of price action. So does this make me bearish yet? Well, not necessarily. Here's what's going on. Well, overall, yes, I'm bearish because we have, as we know, a monthly downtrend in play. We have a full bear market in most of the asset classes that are out there. Now, the S&P and the Dow have so far escaped that, and to some degree, the NASDAQ composite as well. They haven't really gone down to 20%, but they're showing the early signs of falling into a bear with this titanic volatility and a lower high, lower low, a monthly downtrend. That's a very dangerous combination. But what's going to happen during bear markets, or corrective markets, if you will, is that we're going to see extraordinarily strong rallies out of this. So 199 points out of this in just no time at all. I mean, this is actually a stronger rally so far than the one that we had in October, which was the technical term is called face-ripping rally. So many people had their faces ripped off and spent a couple of months to go find them again before they plastered them on, and same thing has happened again. Okay, face-ripping rally here. So what's going to happen with this, and what would make me think that the selling is going to kick in again? Well, what we have to see is, first of all, we haven't changed trend really on the monthly chart has not changed trend. We're still in a downtrend here on the monthly chart. We still haven't really changed trend on the weekly chart. The next higher low will start to change the trend, and a higher high would change the trend back up to an uptrend like that. So if we actually saw the price pull back and then blow out through this high, okay, we'd have a nice uptrend in place, and that's going to be fairly significant, especially for above the 200-day moving average when that happens. Okay, that may cause me to reevaluate things. But for right now, this is just nothing more than a bear market rally, okay? And what we have to look for is to see whether or not this guy is going to set in a lower high, lower low, and start to work lower. Okay, that would be the concern if that happens. Now, this is where we have to watch our 78-minute chart. A lot of times I won't even watch this guy because a lot of times it's just noise in relation to these larger time frames. But if we have this rally here with higher highs, higher lows, higher high, higher low, and so far this, my friends, is a lower high. Now, if this comes down and prints a lower low, then we know that we have a change in polarity happening at the 78-minute chart. What this will do is end up with a daily downtrend. Well, excuse me, a daily swing down. It's not going to be a daily downtrend yet. Okay, that by itself is no big deal, and we sort of need that, and it would be reasonable to expect it maybe to come down as far as the 1950. That would still be a very reasonable target as a retest of the breakout level. And then if that rallies from there and that fails to print a higher high and instead fades down, then we have a change in polarity on the daily chart, and this could be very, very rapid. This could be very rapid. Now, this might only be just a weekly pullback to set up that higher low. We don't know that yet, but everybody, if we do pull into a daily downtrend, it's going to feel like Armageddon again. People are going to be running around going, here comes the bear market all over again. This is why it's so important that you understand how all the pieces are connected together. But as we do know, there is no law that says that the price on the weekly chart has to stop here with a lower high or a higher low, right? There's no law that says it has to do this, that it too has to set up a lower high and then a lower low. It can just drop. And this is typically what does happen during bear markets is the trap door opens up and down you go. Okay? This would be a little early. Typically what we have during these kind of markets is that we usually have at least 2 to 3 months of these strong rallies. Remember, the point here is that everybody needs to buy into the bull case and then become frantic to get out of the positions when the price falls again. So this is a little shy right now, only a month into this thing to see it drop like this. I don't think that's going to happen. I think we have a lot more volatility around this area, a lot more battles to go before this thing's going to drop again. So keep an eye on the 78-minute chart. Let's see what it does over the next couple of days here. I think it would be a reasonable thing to assume that we're going to sell into that ECB news because that's already been priced in. Because it's good, it's basically leaving the market with nowhere to go, and we have the Fed meeting next week, which of course they're not going to raise rates. Very unlikely for them to raise rates, but we'll see whether or not they trip and stumble on any kind of the language. Okay, so watch those price levels, and we will see you tomorrow.